Alexa von Tobel. And this lovely lady is one of our audience members. This is Kristen, and she is going to be helping Kristen out with her choices. Hi, Kristen. Welcome.
Hi, thank you.
So what do we want to start with?
Okay, so first, I just want to say I love April. It is spring cleaning time, and I love people spring cleaning their finances. And tax refund time is a perfect time to use that to really accelerate your financial life. So the first thing I want to say is the average person, the average family gets $2,815 back. You're ahead of that, $4,000. So we'll take
$4,000.
I know. We will take that money.
Hard-working woman.
I know, there you go. And so one thing I want to say just for everybody, for full disclosure, when it comes to your refund, it would be best if you got zero back. And here's why. Because you're actually giving an interest-free loan to the government.
That's right. If you're overpaying, you're giving them your money
and they paid you nothing.
Play around with. Right.
Precisely. But I will take it if you have it because it's a great opportunity. And what we're going to do, Kristen, is walk through what I would do. So give me your money. I'm taking your $4,000. I'm a good financial planner. And what we're going to do with this is run through what you should do out there if you're, from America and you're walking through your refund. I'm going to walk through what I would do.
Okay.
So step number one. I call the fun fund. And this is this thing, Rachel, called the 90-10 rule. So 10% of the money that you got back, $400, we're going to put into the fun fund. And what we want you to do with this is something nice for yourself. And I purposely say 10%, not 90%, because if you do something small for yourself, you will actually more likely give me the other 90% to go towards your financial goals. So this can be a little something for yourself, a cheap ticket somewhere, something you want to buy.
A weekend away, fancy shoes, a neat bag, whatever you want, a day at the spa. That sounds cool.
Exactly.
But it's a good start.
Yeah. Exactly, but it's 10%, not more than that. And then we'll go to station 2 here. Yes, the fun fund.
Everybody likes the fun fund.
Yes. So station 2 here is credit card debt.
Right.
So really important. Right now, the average family in America has $15,000 of credit card debt, and we know.
I know you go ooh, but think about it. You don't see that number all on one statement. But if you think about all the statements you're out there, or school loans and credit cards and all that. That's a lot.
It's a lot, and it's really stressful, Rachel. This is what we know psychologically really paralyzes people. And so what I want to do is take that money that you got back, and if you're out there and you have credit card debt, this is the perfect gift from the government to go pay it down quickly. And so I want to show you how I would pay that down.
This does not represent your actual bill, right?
No,
okay, good, because we don't have all these bricks on your sweet little back.
No.
Right.
But I think the purpose of them being bricks is it's really heavy, and again, it really weighs on people. So what you do is you take your credit card debt and you stack it. And so this is the most expensive. It's almost 23%. So this is the most expensive credit card. And
this is the interest.
This is the interest on
rates
that credit
on your
card.
cards.
And this is 13%. And you can find how much the credit card costs you, how much the interest rate is on the bill. So it's legally required to be on all bills.
Right.
So what I want you to do is kind of stack it up and total it up and figure out what it is. And then what we're going to do, Rachel, and this is super important, is you're always going to pay the minimums on each bill, always, because if you don't, you'll hurt your credit score. But you're going to take the extra money you have, and you're going to pay off the most expensive first until you get it to zero. And if you have extra money, then you pay off the middle, and then you pay off until you have no credit card debt.
Now, if you...
I know, this is a big one, and it feels awesome.
And it feels great to have that off your back. I only use a card that I pay off entirely every month. I don't even like the feeling of this whole world.
Yeah, amen, me too.
If you have cards that have different rates, once you pay this off, should you then get rid of this card?
No. So really important.
Don't close your credit,
You can only close one credit card a year, and it's just really important that you actually know how many credit cards are in your name. And there's a site called annualcreditreport.com that will show you all the credit cards open in your name, and you never really want to close more than one because it could lower your credit score.
See, most people think of that the opposite. Oh, I'll get rid of it and then I won't use it anymore. No.
Precisely.
Just use it and pay only what you could pay off in a month.
Yes, but the takeaway is we're going to get it to zero, and that's going to feel awesome. And what we then know is once you have credit card debt to zero, you actually feel so strong, you then tackle your financial life much faster.